365. Welcome to another video, and today we're going to be looking at the pound NZD. Just a quick announcement. I got a message from someone who thought whatever I said, or however I said it in one of my videos, maybe they thought I wasn't clear, or they think that all these videos are the course. I'm not entirely sure I understood your question, but just to clarify, this is public information on the YouTube channel. Just trying to illustrate the power of supply and demand, also provide value-based content for people, etc., etc. That's what you're going to find on my YouTube channel. At some point in my YouTube channel, you're also going to find me coming back to these things called traders war rooms, where I give weekly signals because I don't charge for signals, etc. When I say course, this is what I'm referring to. Access to the course would look like this. This is a private access now for those of you who want to take a one step further into your learning and master supply and demand. This is about 66 hours based off lectures, long-term lectures, breaking down our trading strategy. It's not random information about the markets. It's literally based on supply and demand, institutional order flows, breaking it down bit by bit up until you have the complete strategy and all the rules in module 1 and module 2 to get you trading profitably by yourself. All right, so the difference between the two things, right? So this is YouTube, where yes, there's a lot of videos out there for information, etc. But if you want to level up, then this is the course, and the link for that is down below. All right, and to log in here, so I was logging in here to have this done for you guys. You can see there the time on Zoom there shows it's 2 o'clock, etc. So there's a verification code that I get when I'm logging in. It changes all the time. So I came to my emails to get the verification code, and then I noticed another email here, like just that yesterday there was a withdrawal request that's been processed on AvaTrade, and man, was I confused because I only withdraw once a financial quarter. And then I realized that, in life you'll meet interesting people like my beautiful girl, my partner, the mother of my kids, who has no interest in learning how to trade, but has mastered the art of withdrawing. So this withdrawal request is technically her. I just found out now that she actually made a withdrawal request, I guess yesterday, Wednesday. There's a small account that I trade by the side for her, so I'm not bothered, and she withdraws as she sees fit. But she needs to let me know so that I can keep track and actually actively trade more on that account. And I thought that was just funny. Like, you have a wife who won't learn how to trade but has mastered how to withdraw. Right. Anyways, pound NZD. That's the asset of the day. Let's get it cracking, right? So I was in this asset last year. Those of you who followed my war room with clean buy, and that's all I did. Bought, held for a couple of days to about 2 weeks or so. Took profit by the white line, so it wasn't a major swing, right? A couple of days, really. End of September, 25th, 26th of September, got out on the 4th, 6th of October, somewhere there. Right, so now we're back, and we can see that we've marked this yellow zone as a no-go through area for any buys, right? So price will always bounce from supply to demand, demand to supply, supply and demand to supply. If you get that burnt into your head, you will know where price is going. When you know where price is going, you now know what to do. You want to know where price is going? This is the link down below that I'm referring to, so that you can get to do this stuff flawlessly, right? If you're holding a sell, you need to get out here. If you're holding a buy, you need to get out there. I was supposed to buy again somewhere here, but you can see this happen in February, and I've already told you guys I was MIA for the first 90 or so days of the year 2023, and also a little bit of most of December, half of December anyway. So I missed it. But anyways, we're back. We're back like we never left, right? So pound NZD, I don't know if it's a good idea to do this analysis on this chart. Yeah, it's fine. I mean, I thought maybe there'll be so many drawn thing. So I'm just going to remove that closed entry trade that I took, that buy that I took with you. So you see, signals like that will be given in assets in videos like this weekly on Sundays, these war rooms. I look at about 20 assets in one go. I tell you what I'm going to do, where I'm going to buy, where I'm going to sell. I don't know if you guys had the announcement, by the way. See this little girl that we raised money for? She got a heart. And I did thank you guys. But in case you didn't watch that video, thank you to every single person who donated. Thank you every single person who took part in the fundraiser. Thank you to all the traders who made a difference with their money. I appreciate you. She actually got a heart transplant at the end of the year in Cape Town. She's living, breathing, and we wish her well. Right. So let's get cracking, folks. Let's get cracking. Don't forget to subscribe, right? Don't forget to like, share, subscribe, right? So we've got the 12 months chart in front of us. We'll come back to this chart. I just want to redraw the stuff here because it's a bit messy, right? Let's go to ICE. Right, so I'm on the 12-month chart. Don't forget, every single candlestick represents 1 year. Every single candlestick represents 12 months, right? So it's quite a holistic data flow. This goes all the way back in time to 1975. 1975, South Africa was deep in the throes of apartheid. 1975, South Africa had what we called racial Fordism, which technically means racial capitalism, where the minority class could consume what was being produced for the majority. So if you look at history properly, which is a combination of social history, economic history, you will then realize that Nelson Mandela did not end apartheid, right? Stop telling your kids that nonsense, right? The apartheid government was broke, number one. Number two, there was a revolution on the ground, right? So it was difficult to maintain peace. Sporadic, very spontaneous revolutions across the entire country at the same time. A lot of people have forgotten all this basic information. If you want to throw out a government, you don't protest in your neighborhood. You don't do a national protest like the EFF. You want to throw out a government, you need sporadic, complete protests happening at the same time everywhere. There's only like 5,000 police officers. There's only like 20,000 soldiers, all right? But there's millions and millions and millions of people, right? So in the 1980s, the stuff is crazy. It's sporadic, spontaneous. The unions are strong. But the government in itself and its economy is flawed. It's an apartheid capitalism. It's a racial capitalism. So that means, and I'll tell you where I'm going with this. It's very important. That means the people who can consume are an elite class. In South Africa, it was just a white minority group, but the workers were this big, right? So you've got an oversized body. So if all these people cannot consume what you are producing, where are you going to get the profits from? Right? Imagine creating houses that most people can't live in because it's illegal for black people to own property or stay in specific houses or stay in specific neighborhoods or drive specific cars. Imagine having a factory of 20,000 workers creating VW Polos in Uitenhage, in Port Elizabeth, but all 20,000 workers are not your customers because they can't afford the car, right? That's the difference between apartheid capitalism in 1975 and what was going on across the border in the world called Fordism. It was actually the golden age of capitalism overseas. And that's because there was a better way to do this. It was called mass consumption, mass production. That's what Fordism does in the 1960s, 50s, 70s. It creates a consumer-based class that way lower and middle class can drive VWs that are made in Germany, blah, 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 right? So it's just how we think about our economics, right? But anyways, side nonsense story, I guess, if you're not into that kind of stuff. In 1975, price was all the way down there, came back up, dropped here, came back up, dropped there. Interesting. M-shape, whoa, value trade. This is a whoa value trade, right? But more importantly, 365 traders, see if I lied to you in the course. See if I lied to you in the course. Back test the stuff, guys. Back test the stuff. Back test the stuff for yourself, right? So we get a full coming home to America type of trade where prices come back where it started, right? Where prices come back where it started. And that's an interesting place to be for price because that means any direction moving forward is going to be a very big presetter to the next 10, 15, 20, 30, 40 years because either we break this area of value and we start creating a sell profile asset, right? Which means if you're intrusive enough like long-term institutions, then 2001, 2002 2022, those were really good years for institutions to set themselves up. I'm talking about people understand that foreign currencies are not just for trading, but you can invest in them long term, right? The sell setup, the sell orders that were put in here were really to mark the long-term wave, right? And markets took a break, pushed price up, took a little bit of profits, and added more sell side pressure. More sell side pressure. And this is pretty much in 2007 during the financial banking crisis. Markets were like, yeah, we need to fuel up on those sells. What do? They push price up again. Price makes contact again with the supply. Price makes contact again with the supply. I'm just telling you what is there. I'm not making stuff up. I'm just showing you what is there, right? And then all of a sudden, we've got this continuation sell power that starts to break structure, break poorly formulated demands, right? Why is that a poorly formulated demand? It's not a bullish engulfing pattern. You gotta look in and zoom in. Like, remember, like I said in my previous video, Alvin called me out on one of the bearish engulfing patterns that I thought was, and he said it wasn't. So I just need to know the asset. But you shouldn't make that mistake, the one that I made in that particular video. Thank you so much for someone pointing that out to me. Don't misread this, right? Because if you just go, oh, look, it's a big candlestick into a small red candlestick, and you assume prices engulfed, you are going to get burnt, right? So markets didn't engulf. There was no demand there, right? But there was one here, right? Complicated 365 candles and a beautiful imbalance. Markets came back and hit. Now this is where we are, but where we are is not as important as where is price coming from, right? Markets have made contact with the supply, which technically looks like this, right? I'm on the 12-month chart here. We're gonna have to redraw all these zones. No, but I want you to see something. So the white border is this supply here of 2016. Then, since then, markets have just ranged, man. They have just ranged. I'm telling you, look at this. Markets come back into play in 2017 and it just range 1 year, 2-year range, 3-year range, 4-year range, 5-year range, 6-year range, 6 years of ranging. The other thing to really, really, look out for is to quickly draw everything on the left correctly, and you'll notice something. Right now, for me, the picture is now clear. It's now clear. Okay, cool. You create a supply, making contact with another supply in 2016, but you also take out a major turning point low. You do. Price does. They really do take out this demand. And then you consolidate like this for a very long time. Consolidation is an annoying range, but it also is a perfect place to rearm, regain, refocus, recampaign as a buyer or seller. And I have a sneaky feeling, the sellers in this market are really busy. We need to see if this price here hit a supply, preferably on the governing time frame. All right. So you see this week here when price came in and came down, what was on the left? We need to figure out what was on the left when markets came somewhere here. We need to figure that out right now. We need to figure that out because if there was a governing supply or a 3-month supply, that's going to be interesting because already to me, it feels like despite this bullish engulfing pattern that you can see for the year 2003, and I'll remind you, the year 2003 is barely over, barely begun, only in May, right? So this candlestick could be something else by December. So we can't count this and go, oh, but Leroy, there's a bullish engulfing pattern here. No, there isn't. This candlestick hasn't closed. It hasn't closed. We're trying to track the immediate area of control. So we're going to go to the presidential chart. Oh, you see that area that I said we're going to mark here? I said we must see what did it contact, right? While we're waiting to see what it contacted, we can also agree that on the 3-month chart, as it was contacting whatever it was contacting, it itself created a 3-month supply. All right, so now we've got a zone upon a zone upon a zone upon a zone, and our charts are getting ugly. I still want to see what this week was reacting to. If it's nothing, it's nothing. But I've already found something here. All right, I've got a 3-month supply and multiple supplies. Prices, every time price comes back, it hits short. They re-bandage the zone, create a bearish engulfing pattern, re-bandage the zone, create a bearish engulfing pattern. Would this zone be, of importance? Yeah, sure, whatever. Let's draw it. Right? This would potentially be where our 3 months, 1 month, 2-month type of swing targets would be. We wouldn't want to think that we are Hercules and we can break through an area of value. So let's mark it there. Let's go to the monthly time frame. Right, so there's that area I said maybe it hit something, and there we go to our left, a governing time supply. Hit once, fresh touch, retest. Very important, because if you come to the course, and I'm talking about the first 29 lectures here in module 1, and you come to this lecture on areas of value. Where are the areas of value? Part 1 and part 2, about 3 to 4 hours worth of information, right? It's absolutely important you know that this has happened on your governing time frame, right? That markets did create a supply, markets came back into your supply, markets then left, right? And now markets are back. And if markets are here, but the first time they left and they stopped there breaking a supply, the potential of this one day erupting to the downside is quite high. But let's keep up with the investigation. Let's keep up with the investigation. And now we want to start to minimize and reduce the color in our charts and all that kind of good stuff. So I'm going to really like make this a peak. So I know this whole area is a supply, but on the governing time frame, you know, you've got a very strong peak supply right there that's made contact with the supply on the left, and that's another supply from 2008 2009 financial crisis. Is fine. Right now we're worried about these areas here, because these are the ones that are going to very much affect our trading a lot quicker and a lot impactful right now. Right, when I zone into these zones here on the monthly time frame, I want to find demands. There's one, broken. So there's nothing right now stopping price from falling forever, right? Nothing. Yes, yeah, okay, maybe you can say, but Leroy, what about this area here, right? Right, there's a valley here, valley-based demand there. All right, sure, I'll give that to you. But I'm talking historically, nothing that I'm necessarily worried about. Here, on the other hand, if we're to narrow this area down like that, we have a slight problem in the sense that we don't really have the perfect imbalance that we like. It's not the type of imbalance that we like to see. All right, some people like it. I don't like it. I don't use it. Right, you can see here markets did rally into this demand right here, this demand here. You can see markets try to push up for months. Right? It's not like small candlesticks, guys. This is from December 2020 up until this July 2021, and then markets fell back down, and then markets used the exact same demand again. Right, markets came back to the exact same demand again, and then pushed up into this supposed supply, which I don't like. But it doesn't matter if you don't like it or we don't like it, because this is part of a bearish engulfing candle on the 3 months chart. So there's still a presidential supply there, hence price keeps falling back, right? But then when every time price falls back, even here, not impressed, not happy with that. I don't consider that a valid supply. There's an imbalance, sure, if you want to call it that, but I'm definitely not impressed at all. Right, multiple rejection candles as markets are feeding the buyers in here, but eventually, like I said, this demand gets broken. Why? Glass effect, right? Price keeps coming back to a specific area of value. Bet you price is going to lose momentum and potential and break through that area, right? And then this is where markets are today, right? Which is quite annoying, because it's not going the way I want it to go. I would have preferred cleaner zones. I would have preferred markets to rally up to cleaner zones, and there's none, which means now we're looking at a potential of price coming all the way up to here potentially, or markets potentially coming all the way down there, which is a little bit annoying, right? Because now I'm a bit 50-50 on both movements. Why? Price could push up. There isn't really a valid supply. Price could historically stop being stopped here and push up. If we go back to the 3 months time frame, you can see for yourself that the monthly areas that I've drawn are already fed. They've already, markets have fed a lot into this bearish engulfing pattern, like a lot, like really a lot. And if you look to the left of the 3 months time frame, these are all retracement zones, right? This is not necessarily an order block on the 3 month chart. The only order block that we see is all the way up there. These are all retracement zones. So I'll show you what I mean by that. If I draw a Fibonacci from this swing high to this swing low, and I can do this on any time frame. This is why these videos are so important. You really need to understand what we mean by price is fractality, right? And if I come here to this area that we said we wanted to see what markets were doing, right? You realize that this area is indeed touching a 1 month supply somewhere there, but you can see it's also in between 52. It's a proper retracement zone, right? It's a retracement zone. So be mindful of that, right? The lack of clarity in the short to medium term is because the higher time frames are still ranging quite a bit. They're potential trades to take, but they're going to be more riskier than usual because you're not jumping off a valid governing demand and you're not leaving necessarily a valid governing supply. Right, let's see if weekly might provide us some short-term direction, right? So on the weekly time frame, today is the 4th of May, which is what? Thursday. Okay, that's not bad. So I just need 24 hours. I need 24 hours, right? I need Friday to happen, markets to close on Friday for retail traders. And on the weekly time frame, if this is still the case, and we still have a bearish engulfing pattern, yippee, 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 hooray, right? There's a high chance that we can then sell a little bit, right? If we look to the left on the weekly time frame, we do have some valid supplies that formed up. They're not necessarily in alignment, so we need to be very careful. And we also need to look left, right? We need to look left to see how many times prices psychologically visited this area. There we go. Right, so there's this higher left there, right? Main supply in 2020. Markets create a new one. Markets hit that one there, right? Markets drop. Markets come back in. Take out this one. Stop at this higher supply there. And then create a new imbalance, creating a newer low, right? And then this low takes out that main demand that we're talking about. And now markets are reacting here, right? So today is Thursday. I don't know when you'll see this video. Just so you know, the analysis was done on Thursday the 4th. So hopefully I'll release it by Saturday late. So next week, Monday, the 8th of May, if this is still valid, then we can maybe potentially start to look for some sells, right? So we're going to draw this zone like this, but remember this is a weekly supply, right? So we want to be very careful. It's not the type of sell you hold until Christmas. This is a daily supply to a daily demand. You want to mark that out, daily supply to daily demand. If markets come back down, my bet would be somewhere here, right? So this is where all these the weekly demand buyers would be. I'm not looking to buy in this market. I'm not really looking to trade this market, if I'm being honest, but I definitely want to mark out a good place for you guys to get out. Right, you can see on the daily time frame, today being Thursday, markets have already started to reconsolidate, right? So last week, Friday, at the close of the markets, we had an indecision candle, which signaled a market reversal from this uptrend. And then Monday, Tuesday, markets dropped. Wednesday, Thursday, markets are consolidating sideways. And a couple of hours today, after the New York session ends, you can see there's going to potentially be a new bearish engulfing pattern, which means if you're not on the juvie train by Friday or Monday, right, this could happen. And this pullback doesn't even have to be that deep, eh? Markets could just do one quick candlestick, and then gone. Right, so this is what you're potentially looking at. That's number one, trade number one. And trade number one fails, then wait for a longer term pullback. I don't get to decide these things, right? It's just how the market is. Two options. Your trading strategy's job is to give you a high probability setup. We know selling high always yields the best results, but we also know that price does leave you behind, right? And you can see already on the higher sell, markets already come back on the date. I'm not making this up. It's right there in front of you, right? So today, when the London session started today, or the Asian session, or whatever, our pending orders, had we looked at this asset last week, would have been already preset, and today would be in our first phase of profits, right? So there is a chance that markets will stop here, right, and take that as a sell-off. But there's also a chance that markets could pull back up there. All right, and so it's dealer's choice, and I definitely wouldn't want to hold any sells past this green area here. 365. I hope you enjoyed this video. Hit the link down below if you want to be part of our family and really learn supply and demand. Lots of lectures. Nobody robs you of anything. All my trading strategies, the exact rules. Asset by assets. Videos are obviously lengthy, but you can pause, take notes. I walk you through charts over and over again until it is a part of who you are, because in this markets, mastery is key. Right. Until next time, take care. Goodbye.